the first 1% we are getting, I think, after, a near 1% we are getting after probably 10, 11 months.
The possibility of a recession when we met here in Davos was very high last year, but today everyone is talking about a soft landing at best.
Well, the markets are doing really well today, Pavitra. That's something that we've been discussing.
Well, that was a day so far. It's a Monday afternoon. We are coming to you live from the CNBC-TV18 Oswald studios. This is a fresh new edition of Closing Bell, the last hour of trade coming right up. I'm Prashant. With me, my colleagues Rima and Surabhi here in the studios, and Nigel is joining us from the newsroom floor right now. Nigel, hi, good afternoon. Guys, hi, good afternoon. Up and about, basically.
Off to the races to start the week.
Absolutely.
New day, new record. It's like that, right?
22,000 on the Nifty, 73,000 on the Sensex. You basically have something or the other moving, right? Middle of last week, it was just Reliance, then IT, and today pharma. More sectors, more underperforming sectors joining in. And there aren't that many, actually. And when I say underperforming, that also has to be a qualified statement, because it's not as if there is any sector which is, you can say is completely bombed out or nothing is done well. Pharma, for example, over the last 6-7 months has done very well, but relative, it's all relative. It's kind of still got perhaps value. Reliance is another one which now for the third or the fourth day running is doing well. And IT services is something which we will shine the spotlight on. We've been doing that since the morning. Just a few levels before we kind of go any further. I'll start with the Nifty Bank. The Nifty Bank, if you take a look at the price action so far, at the day's highest point, it basically tried to take out the falling trend line from the all-time highs. Where the trend line meets the price, that's around 48,150. That's nothing. That's about 100 points on a 48,000 index from where we are right now. So that's the first level. After that, you basically have got to take out the recent high, which is 48,382. And then, of course, it's clear skies all the way to perhaps potentially a new all-time high. Again, all these numbers we're talking about under 5% here. Near-term upside level for the Nifty, it doesn't change. 22 to 22,250 is where I'd put those numbers at. We'll see once we hit that 22,250, whether we are, it looks like we kind of have completed something, or this is just sort of non-stop, continuous kind of up move, even beyond that. A fortnight of consolidation, and between Friday and today, we've basically broken out in a pretty decisive kind of way. Rima.
Well, the all-time high today, intraday, is 22,084. So we're about 20 points away from that level. Some of the big movers include IT. The IT index, after a plus 5% gain on Friday, has followed it up with another 2% rally today. But the IT index has come off from the day's high, especially if you look at individual constituents. Something like a Wipro is off from its session highs by close to about 6%. Other than that, you've got a LTI Mindtree, which is again off from its day's high by quite, significantly. So IT's come off from the day's high. But apart from that, CPSC continues to see strength. The Nifty CPSC index is a gain of 2%, and in that, names like NTPC are up 1.5%. Reliance Industries continues to be strong, and HDFC Bank, ahead of its numbers tomorrow, is up 1.5%. So these are some of the big contributors to the up move that we've seen today.
Oh, absolutely. So we've got sort of strong hands holding this market up. On the mid-cap screen, it's not been a bad day at all. The mid-cap index is actually pretty much in sync with the Nifty. The gain there is again about 0.75%. And we have a steady advance decline ratio. It's not sort of too skewed in favor of the advances, but it's not bad. Almost neck to neck, even Steven, 1:1 sort of a ratio playing out. It's a huge PSU day today, massive PSU rally, and big moves returning, for instance, in these railway stocks. Look at what's happening to an IRFC, 15% higher, or even an RVNL, which is now sort of punching about 7-8% last I checked. And then you have names like Ircon, which are moving higher. Beyond railways as well, your SGVA and your MMTC, some of the PSU banks are also up and about. So again, PSU's IREDA, the recent IPO as well, 10% up on that one. So it's a big, big PSU day. And then, of course, we're going through individual result reactions, and we'll talk about those stocks. Anand Rathi, for instance, is cooling off, reacting to its numbers. And, you have a BHL. By the way, on BHL, didn't mention they won a pretty big order, a huge award. That's added news flow. But otherwise, it's individual earnings to which stocks are reacting, and the big move really is in PSU. So not a bad start to the week. Nigel, if you're a bull, you're absolutely loving it.
Well, that's right. And if you pull up a couple of stocks, tourism finance, that stock is locked in upper circuit close to around 20%. I think it's the highest you've seen in multiple years. Dhanlakshmi Bank as well is locked up close to around 20%. So I don't know what's going on there. EIL, the stock has in the past promised that it's going to be breaking out, but then it's corrected. Now, today it's seeing a bit of a breakout, because the last week it went to around 220, then it corrected. Now, today it's on the verge of going to around 230. So keep an eye out on a few of these stocks. They're doing very, very well. Vascon is another name that's seen a big move. Some of these stocks had rallied, they cooled off, but now they're coming back, and volume's very, very large on that. So it's coming in our top volume traded stocks for the day. Let's find out how do you trade the Nifty, though, from here on. We have Ashish Kyal who joins in at around 2:30 p.m. to tell us about how would he trade it. Hi, Ashish. Good afternoon. Good to see you, Win. Well, all ends of the markets actually are firing because you have tech that's doing well. Today, the Nifty Bank as well is doing well. And Reliance Industries has been supporting. What do you do from these levels, though? 22,070 is what we're looking at on the screen. So what are the levels on the Nifty?
Hi, afternoon to you and all the viewers. If you remember about a week and a half back when we were discussing, I talked about 22,000 is the likely level to be crossed when Nifty was just around that 21,600, 700 levels. And here we are above that 22,000 mark. So there is no stopping here. There is no looking back. And every day there is some or the other sector that is, or the stock that is helping the index move higher. And it's a very healthy sign. If you see, there is a sector rotation when we saw Reliance, the heavyweight, taking it higher. Then post the Infosys TCS result, we saw that stock. Today we are seeing another sector rotation happening with some pharma names and selective stocks taking it higher. So that's a very positive sign. The overall advanced decline ratio also remains healthy. So I think we should be headed on the upside towards the level of 22,276, which is again square of 9 level. That's my target over near term. And one should use dips as a buying opportunity. Maybe if you can get it again at around 21,970, 21,980, that's a better area to buy the market. Keeping 21,890 as a stop loss and then aiming for 22,276 because that will be the area where you will get a good risk reward ratio, and that's what I am looking at. And the overall tone remains bullish. Do not try to catch a top in this market. Use any dips as a buying opportunity.
Thank you very much for that. Let's get down to the stocks. Metropolis Health. Okay, gains interest. Okay, before that, we'll just get to his picks as well. Ashish, what do you have for us?
The first stock pick is going to be Mazgaon Dock. If you see Mazgaon Dock, there is a very strong momentum we are seeing, and the stock is looking like breaking a neckline which has been maintained for around 2 months, 3 months now. So if that happens, we can expect Mazgaon Dock to move towards the level of around 2,580 on the upside, and one can maintain a stop loss of 2260. And the next stock pick is going to be Jindal SAW. We saw some correction earlier in the month, but later now, again, the stock is showing smart recovery. Volumes have picked up good, and we can expect the stock to move towards the level of around 560 on the upside, and one can maintain a stop loss on the downside around 483 levels.
Ashish, Polycab, I think it is still an F&O ban, I think, but it reports numbers, I think, later this week on Thursday. How is this one? It's gone quiet after those 2 days of very large falls. On charts, how is it looking?
Absolutely. So Polycab has a real sharp decline. I can see that there has been a sharp fall of more than nearly 20%, and again the correction on the next day. And the stock has a very important price action area around that 3,500 to 3,650 levels. So I would not try to bottom fish here after such a sharp decline. I think it's going to take a lot of time, maybe a few months for it to consolidate, and I will use pullback to short the stock. Maybe 4,500, which is the gap area, will remain a hurdle on the upside, and on the downside, I think the support is only near around 3,600 levels.
Okay, what if that's Polycab recovering in today's trade? We'll discuss Polycab in greater detail. For now, Ekta is waiting by to talk about Metropolis. This is after the company clarified on recent reports surrounding the Delhi government's Mohalla Clinic project. Ekta is here with the details. Ekta.
Thanks for that. Well, yes, Metropolis has made a comment with regards to that. They have said that they were awarded the smallest portion of the contract after being the second highest bidder. They followed all due procedures and guidelines as per the contract, and all samples handed over to them had been duly tested as well as reported. The billing for the testing was done on the basis of the sample received, test performed as well as reported. The revenue from the Mohalla Clinic project since inception in Feb of 2023 was only around 3.58 crores, which is less than 0.5% of the total revenue. So the financial impact is extremely negligible or small when it comes to Metropolis. Due to delays in receiving dues, the company in fact sent a notice, according to their press release, to the Delhi government on the 19th of December, and they have expressed an inability to continue with the project as well. So overall, the financial impact is less. They have decided not to continue with the project, and as you can see, whether there were any kind of concerns with regards to this have now been mitigated, and the stock is higher in today's trading session.
Okay, thank you very much for that. If you pull up the year-to-date chart of the stock, it started falling from levels more than 1700, went down to levels of 1500 last week, and from there it's seen about a 50 rupee recovery, now back to 1550. Dipan, you want to comment on this particular development? The stock has seen quite a fall, though the company has clarified that it got a very small portion of the overall contract. So does the fall in context seem excessive after the company's clarification?
Yeah, I think it's not such a material event per se. First of all, good afternoon and thank you for having me on your show. And end of the day, I think it's the entire story in Metropolis is on account of higher healthcare spends and increasing their distribution network and gaining market share from the unorganized sector. So from that point of view, I don't think it's going to impact materially. But what has happened is that over the last few quarters, profits have been gradually inching up, and stock in a way has remained pretty much stagnant. So the valuations have compressed and soon may be reaching a sweet spot where one can buy into a great story which has a good secular growth momentum.
Got that, Deepan. Stay with us. I just want to address Polycab now. The stock, of course, slumped. We were discussing this earlier with Ashish and the technicals. But Jefferies is out with a note. I mean, they are looking at, of course, the events timeline on Polycab, but also some of the earlier instances where other companies got these got into these tax tangos and how some of that played out for each of them. Hormuz is kind of recapping that for us. He's standing by. Hormuz.
Well, if you're Polycab, you would want to listen to some of this because it's some heartening piece of information. But I'll start off with the share price. The stock has not done very well since the start of the year. It's down almost 25% since the news of these alleged tax evasion reports first came out. And since the peak that it made on the 12th of December, which was around 5,700 rupees, the stock is down almost 30% from those levels. Now, to recap about what has happened is, the news first emerged when Polycab, in a notice to the exchanges on the 22nd of December, said that the income tax department has commenced searches at some of his offices and establishments. And this again took a toll on the 9th of January when the stock fell over 9% as reports began to emerge in the media that Polycab has been accused of alleged tax evasion to the tune of 200 crore rupees. Now, on the same day, Polycab, in a notice to the exchanges, said that it has not received any communication from the income tax department with regards to the outcome of the search process. But on the next day, which was the 10th of January, the PIB put out a note saying that they have commenced search and seizure operations at a group engaged in manufacturing of wires and cables on the 22nd of December. However, they did not name the company involved, but sources told CNBC-TV18 that the company concerned is Polycab. And as a result of which, on the next day, which is the 11th of January, the stock fell 20% on these allegations, and it was the biggest single-day fall that the stock had seen on record. Now, this is not the only company where such instances have taken place over the last 12 months. In May of last year, an IT search took place at Mankind Pharma. In June, it took place at Shree Cement. For Hero MotoCorp, the Enforcement Directorate searched the company offices and also the home of its executive chairman in August last year. Havells was also searched in November by the Directorate of Revenue Intelligence and RR Kabel. So almost all wire and cable manufacturing companies had some of the other search operations that took place there. But Jefferies is of the view that although the regulatory action at these companies may differ in nature, the stock price over a period of time has recovered because of the business performance. And that is why it continues to maintain a buy rating on Polycab with a price target of 7,000 rupees. Although it mentions that it is still awaiting more clarity on these developments, but it says that it is expecting the third quarter sales to rise around 15% and margins to expand by around 40 basis points compared to last year. We'll see all of this when the company reports its results on the 18th of January this year.
I know, absolutely. This later this week, basically, right? Hormuz, thanks very much for that. Deepan is still with us. Deepan, any thoughts? This one, Polycab?
Yeah, Prashant, we are in an uncertain era when it comes to Polycab. And although the stock has corrected by, I think, 20% is what I heard, it still trades at a P multiple of around 40 times on a trading 12-month basis, which is quite fair, I would say, and is not at distressed valuations. And end of the day, Polycab remains largely a cable company, and they are trying to diversify into appliances, but that entire foray has not been very successful so far and has a very marginal contribution. In my opinion, there are better cable companies to buy, or within that particular space, company like Apar Industries, which is into conductors, transformer oils, and as a cable division, is available at more reasonable valuations and great export prospects as well. And KEI also is an interesting company, I think around about the same valuations, but the track record has been slightly better than Polycab. So I wouldn't say that just because this event has taken place, Polycab is at attractive valuations. And the outcome of all these income tax searches and seizures, that goes very much into the future because whatever the income tax will declare, the company will always appeal against it. So these things kind of take very long. But just because the stock has corrected doesn't get it into a buy zone.
Okay, all right. Hi, Deepan. Good afternoon. Deepan, I wanted to ask you, what's your view on Jio Financial Services? You know, it comes out with a set of numbers. Reliance Industries is moving up. We know it has 6% stake out there. Standard disclosure with regard to the owner of the channel that you're currently watching. But what's your view on that stock? Because in this month itself, you know, the stock is up more than 10%. If you pull up a month-to-date chart. Your view?
See, I think a lot of influential investors have a very positive view on Jio Finance, and they actually feel that it will challenge Bajaj Finance and some of the other NBFCs as well. But this is not an easy business, and scaling up an NBFC takes time. It's not like manufacturing where you set up a plant and from next day onwards, if the circumstances and the environment is good, you start to generate profits. So building a loan book, building an entire team and technology platform, these things take time. So I'm not that optimistic that Jio Finance will immediately start to, you know, scale up really well and perform in terms of top line, bottom line, and stock price. But nonetheless, I think you know, the reputation of the promoter precedes them, and they have built a lot of scale in a lot of businesses. And this is one area where, despite the competitive intensity, they have a platform, they have the connects in terms of merchants and consumers, having done consumer business themselves. So there are certain advantages, but some of it is already in the price, I think.
Okay, you know, Deepan, since you briefly mentioned Bajaj Finance, it seems the street is a little bit nervous on that one. It's corrected, what, 7-8% from the recent peak, I think 8 to 9%. What's your view on that one? Valuation-wise, obviously, it's never been cheap. But do you think that large base will catch up and suddenly you have a formidable player that we just chatted about coming into the same space? Would you continue to remain bullish on Bajaj Finance, or will you wait for a deeper dip?
Yeah, Nigel, first a disclosure that we and our clients are invested in Bajaj Finance. And I don't think that just because Jio Finance is coming, that Bajaj Finance's growth rates may get impacted or that they will gain significant market share. See, Bajaj Finance has reached the status of consumer finance and kind of book which they have built, and the diversity which is then the book over the last 5-10 years or so. And these things take time. At the same time, I think Bajaj Finance has been a big underperformer, and yet the numbers have kept on coming through quarter after quarter. And this quarter was, whatever the pre-quarterly release was, very impressive. So I'm very positive on Bajaj Finance. And even if the valuation multiples don't expand, just the earnings growth and the growth in the book value should generate at least a 15-18% type of a return on the stock price for the next 2-3 years or so.
All right. You know, Deepan, stay with us. We'll take a quick commercial break here. We'll come back. Shibani Sarkar Kurian of Kotak Mahindra of AMC will also be joining in on the other side. Stay tuned.
Welcome back. You're tuned in to Closing Bell. Now, Tata Consumer is one of the big movers after the company announced the acquisition of Capital Foods and Organic India. Mangalam joins in with the details. Mangalam, the stock is down 1%. Is there anything about these acquisitions that the investor community did not like, or is it just routine profit booking after the run-up that we've seen?
I think it's routine profit booking after what the run-up the street has seen on Tata Consumer. In fact, on Friday's trading session itself, the stock hit a fresh record high. It has been gaining over 10-12% in just the last 10 odd sessions. So in light of that up move, the fact that it hasn't fallen much in profit taking is something that's telling you that the street perhaps likes this. Why is that? Because one, the company has made not just one but two acquisitions. They've acquired Capital Foods, which owns a strong brand like Ching's as well as Smith & Jones, for about 5,100 crore rupees. They've also acquired Organic India, which is the food business of Fab India, for about 1,900 odd crores. Now, just these businesses, what is it that they do? Arithmetically, they add close to around 750 to 770 crore revenue from Capital Foods with a margin upwards of 20%. Organic India is about 360 to 370 crores revenue with 17 to 18% margins. Tata Consumer's own margins are 13 to 14%. So these acquisitions just by itself are margin accretive. But here's where the kicker comes in. Not only are they margin accretive, they're also scale accretive, because Tata Consumer's reach is 3.8 million stores, whereas Capital Foods is just 0.4 million stores, and Organic India is 24,000 stores. So imagine these products being taken to the Tata Consumer's entire distribution network, as a result of which there's a lot of revenue growth opportunity. And synergies-wise itself, the management did say to us that Capital Foods with margin synergies, which is currently 20%, could actually be a 30% margin business. And all these companies are likely to grow in high double digit and grow multi-fold as well. So as a result of which, these are value accretive acquisitions. The street likes that. The only fly in the ointment are the valuations at which Tata Consumer as a stock is trading, and the run-up that it's seen before the announcement of these deals.
From a brand perspective, now with these two coming in, I have all the cuisines to appeal to the Indian consumer. The Sampann appeals to the Indian taste, Smith & Jones is Western, and Ching's Secret, I would say, right now it is mostly Desi Chinese, but can probably go Oriental. So I've covered the entire plethora of cuisines that an typical Indian would have, and that plays perfectly. Strategically made sense. I can say that we are going to grow aggressively on the top line. Define aggressive as high, strong, double-digit growth, right? And EBITDA would be significantly accretive to our portfolio. So we would see a significant increase in the EBITDA margins for ourselves. I would say significant change in the growth trajectory of TCPL with these brands, and EBITDA accretive. 400 basis points from trade margin is a given, because that we know the number from this thing. The integration team now will go to every single minute detail and then draw up the map. We do expect significant amount of synergies to come out, given that they were, as I said, they were operating subscale.
Look at Polycab. I mean, the intraday will come up on your screen. It's a 6.5% move. We were talking about Polycab right at the beginning of the program, and that's a very large move coming through on Polycab right now. So 250 plus rupees, and a lot of those gains coming in the last, I think, 10 minutes or so. I think the move started at about 220, 225, and from 4,070 levels, it's moved up to where it is 42, almost 42, 50 or so. So that is Polycab, which was stock of the week, last week, basically, on the downside. But Deepan, you heard Mangalam talk about Tata Consumer, you heard the management. What do you do with the stock?
Yeah, I think that Tata Consumer is gradually scaling up its business, and these acquisitions are in the right direction. But the benefits of this will be 2-3 years into the future. And valuation-wise, Tata Consumer is one of the most expensive FMCG stock. Of course, it has got value in subsidiaries like Tata, Starbucks, and Nourishco. But then I think a lot of the positives have been captured in the stock price. As an investor of Tata Consumer, as a disclosure, I remain invested. But making a fresh investment at these levels, I'm not sure that the risk-return profile favors you.
Thank you, Dipan, for joining in. Shibani Sarkar Kurian, Senior Executive VP and Head of Equity Research at Kotak Mahindra AMC, joins in now. Shibani, Tata Consumer is a great story. If you had it in your portfolio, you would be raking in big bucks. But at current levels, how do you find the valuations of companies like Tata Consumer?
Hi, good afternoon. Without taking company names and company specifics, let's look at what's been happening in the consumer space per se. Clearly, post-COVID, the recovery in the consumer segment has been K-shaped, with the mass segment seeing muted trends, while the premium segment across the board has recovered much faster. And that's across all consumer-facing sectors. Now, incrementally, what we have been seeing, especially where the FMCG basket is concerned, is one, from a valuation perspective, companies are now trading at multiples which are closer to their long-term averages. From a rural demand perspective as well, we have seen that rural demand has more or less bottomed out. And while there is no sharp V-shaped recovery where rural demand is concerned, but at the margin, it does appear that from here on, we should start seeing slow and steady improvement where rural demand goes. And therefore, from that perspective, FMCG as a space, specifically more so because margin tailwind is in your favor, given that commodity costs have been under control. At this point in time, within the consumer basket, we are evaluating the entire FMCG pack, both in terms of valuations, demand uptake, as well as margins which support earnings.
All right, Shivani, good to see you in as always. Shivani, how are you all positioned on IT? People didn't have too much expectations, and it seems like that student in the class that wasn't too good, too bad, but didn't disappoint. No mischief, the street likes it. And those numbers, in fact, have got a big green signal. So how are you all positioned on tech?
Hi, Nigel. Good to speak to you always. So on tech, we have been actually been cautious on tech over the last year or so, simply because of the headwinds that we saw from a macro perspective, where US and Europe, in terms of geographies, were concerned. In terms of positioning, we are slightly underweight to neutral across our portfolios where IT goes. However, in the medium term, especially going into FY25, we do start seeing some improvement in revenue. And as you know, that in terms of multiples, revenues has the maximum impact. Also, however, we must remember that post-COVID, we saw a sharp, mid-teens kind of revenue trajectory for many of the IT companies. We now expect that revenue growth will go back to a more normalized run rate. Deal wins have been strong, and hopefully over the next year, you should start seeing translation of deals into revenues, which should help in terms of the uptick. And margin trajectory has been fairly stable. However, again, within the IT pack, if you looked at what's happened with the midcaps have clearly run significantly ahead in terms of valuations. And therefore, between large caps and midcaps, we find value from a risk-reward perspective where large caps go, while in mid-caps, we would be selective in terms of the names that we have in our portfolios.
Got it. Shivani, hi, good afternoon. I know you don't want to talk about single stocks, but Polycab, just tell us the way to think about something like this. My colleague Hormoz outlined previous instances, and I also looked at some of them, and this was a Jefferies note, and their conclusion was that these things usually prices recover. Because with this one, we saw a pretty significant stock price damage. So just without commenting on whether you'd buy or sell this particular stock, what's the way to think about a situation like this?
So difficult question, and again, I don't want to get into a specific stock, but I think one thing that we have to keep in mind in markets, whether it's a bear market or a bull market, is focus on corporate governance and practices of companies, and that has to be an integral part of your evaluation of companies. Of course, in some cases, some of the instances or some of the events may be difficult to forecast. But I think if you just keep your head down in terms of how you evaluate companies, give a lot of importance to corporate governance practices, that is something that should be very, very integral in terms of your overall stock picking and the way you construct your portfolio. Will be very difficult for me to comment on a specific stock or a specific event as you are asking. But as I said, from a portfolio construct perspective, the model that we internally follow is what we call as business management and valuations. And that is something that we stick to where our investment process and philosophy is concerned.
Okay, fair enough. Shivani, hi, good afternoon. Surabhi here. I just wanted to get a sense on how you were dealing with the PSUs now. Because they've had this roaring rally, right? And there's still more. couple of lull weeks, and then here we go again on a day like today. So what's the house call? I mean, have you been booking some profits as well? Would you look at investing again at all? What is the approach that you're taking?
Hi, Surabhi. Always a pleasure. When you look at PSUs, we tend to look at PSUs as one basket or as a homogeneous basket. But remember, PSUs are spread across sectors. So whether it be public sector banks, whether it be utilities, defense, oil and gas, so it's all spread out. And the way we have approached the entire PSU pack is that we have looked at evaluating businesses in each of the sectors that they operate in. If we believe that from a company perspective, there is still scope for improvement where return ratios go, which will help support further multiple re-rating, we have looked at those stocks even within the PSU basket. So some of the spaces where we have looked at and where we have been positive within the PSU space, one has been defense, where incrementally the growth opportunity continues to remain fairly large. Within the oil and gas segment, there are pockets of opportunity, given that valuations are very attractive and possibly in your favor, which will help in terms of protecting downside risk. And within the PSU banking space, we at this point in time would believe that it is better to stick with the larger PSU banks, where you have comfort in terms of their ROA profile, which will help in terms of supporting valuations.
Defense, oil and gas, and PSU banks. These are
Selective
three PSU pockets.
banks.
Selective PSU banks, 3 pockets that you like. Clearly, railways is not on your list. So therefore, do you think there's some exuberance there? And, I don't know if you still have exposure across funds, but if you do, would you be booking profits?
So I think what we need to look at is in some pockets where there has been considerable exuberance, specifically given that float has been low, we need to be cautious because there clearly froth is building up, and therefore those are the segments and pockets where we would look at being cautious even within the PSU pack. As I said, that the way to look at it is that given the kind of move that we have seen across PSUs, it is better to not look at it as a homogeneous basket, but evaluate each company on its own business merit within the sector that it operates, and then tie that to valuations. And of course, be cautious on companies which have moved up because of either low float and therefore considerable froth that has built up.
Shabani, great speaking with you. Thank you very much for joining in. Markets are back to the day's high, now inching towards 22,100 and a 200-point rally on the Nifty. Some of the last hour movers include a Maruti Suzuki, which is up 1.1%, and HUL too has come in for some amount of buying, even as the morning favorites of Reliance Industries, a couple of IT names like Infosys, continue to get bid up. And PSUs like ONGC are also shining bright, 4.5% gain on ONGC right now. We will slip into a very short break. As always, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our experts.
Well, markets roaring ahead, almost 22,100 odd. Fantastic move is what we are seeing, and all the constituents really are firing. Tech, Reliance, banking names. You can't have a better looking picture, I think. So the only problem is the advance decline ratio. It's not a rara go in favor of the advances. In fact, that's pretty much even Stevens. Good time to get Nimesh in. Nimesh, what are you picking up in D-Street Chatter?
Well, Nigel, record highs, you rightly pointed out, you can't complain for such a market, right? Every segment is firing. Reliance, banks, tech, all are doing good. But in terms of flows, it's a kind of a better sellers market. So at least at higher levels, the sense I'm getting is there is profit booking happening. There is selling is happening from the larger institutions as well. So that's a key message in terms of institutional flows are concerned. Even if you look at technology, after a big gap up opening, you saw some bit of profit booking in most of the technology stocks as well. So from the highs, most of the stocks are down 4-5%, right? So clearly, the numbers were better than what the street was expecting, but they were like so great for the momentum to continue. So some bit of profit booking there as well. And I guess the sector rotation continues. So today, pharma for a change is doing good today. A lot of the PSU stocks are doing good. And within PSUs, it's the rail PSUs which is doing really well. There is a lot of hope now that there could be further capex expansion from the government on the railway side. So RVNL, IRCON, IRFC, all are buzzing in on large volumes as well. So I think that's one side which is doing good today. I guess the earnings are going to dominate, and within that, all eyes will be in the financial numbers, because HDFC Bank will report tomorrow, and on Saturday we have ICICI Bank as well. So if this market has to go further higher, it has to be from the financials, and within that, I guess HDFC Bank and ICICI Bank will be key to watch out for. So earnings will dominate the near-term trends. The markets are at record highs, but in terms of flows, my sense is FIs are better sellers.
And today there were a couple of large trades as well. So tell us some stocks that you're particularly focusing on in terms of news flow.
Sure. So in terms of individual stocks, I'm first focusing on the two large block deals, TFCI and Zomato. Both having very different moves today. TFCI is locked at 20% upper circuit, and again there was a large block, 6 to 7% equity got changed hands. It was part of my chatter list a few weeks back, and I had hinted that there could be a large block deal soon. There is a corporate body owns close to 18%, and my sense is they were sellers in today's block. So the disclosures on both sides, buyers and sellers, could be quite interesting in TFCI. The second is Zomato. That stock is down 4% in today's set after a large block. I understand the domestic mutual fund was a seller in today's block. So again, disclosure there would be interesting. In fact, there was a UBS note today, and it did suggest that maybe the Q3 is a bit soft in terms of earnings. So again, that is weighing on the stock as well. So that's Zomato. The second is Exide Industries. In a good market today, that stock is down 4%, large volumes as well. I understand the FIs are net sellers in that stock as well, so expect high delivery volumes in Exide today. Of course, the stock has done really well in 2023. The third stock is ONGC. Within the PSU basket, this is one stock which has actually caught a lot of HNI interest as well in the last many days, been a big move as well in ONGC as well. For ONGC, the street is anticipating a large dividend payout before the March end, so that's keeping the stock exciting. And the last one is Hutco. Big volumes on that stock as well. I understand some bit of HNI interest is back on that stock as well. And also for Hutco, the buzz is that maybe you'll hear of fundraising from the company very soon. So that's the reason why Hutco is buzzing in trade today.
Okay, all right. Thank you very much, Nimesh, for all of that buzz and all that talk from the street today. Let's move on and focus on some of the individual stocks that are in the news. HDFC Life has been under pressure pretty much throughout the session. This on the back of course, a little disappointment on the street with respect to the results and a lot of the brokerage calls that have come in after what was a pretty weak reporting for the third quarter. We have Upasna here with the details. Upasna, most of the notes that I was looking at, most of them were looking at EPS downgrades and cuts. Tell us more.
Well, HDFC Life has reported a weak Q3 FY24 and Investec has given a buy rating with the target price cut by almost 9% to 750 per share. It sees a weak near-term outlook, mainly driven by weak APE growth and proposed regulations on surrender values. It has downgraded the FY24 and FY25 APE estimates by almost 8%. It says that the weak growth was led by several factors like decline in high-ticket policies, flat yield curve impacting the demand for non-linked products, and HDFC Limited consciously curtailing the ULIP growth. Despite all these headwinds, VNB margins improved across the product categories is what the brokerage has highlighted. Now, Morgan Stanley has given an outweight call with a target price of 780 per share. It says that the execution and manageable outcome on the regulatory proposals will be the key to watch out for. Now, HDFC Life in its Q3 FY24 con call has highlighted that the growth in Tier 2 and Tier 3 towns have been twice of the company's growth and has accounted for almost 65% of the company's overall top line. It is also aiming for 10% growth on Y-on-Y basis in Q4 FY24, and it says that protection growth will outpace the overall company's growth for the next 3 years. There can be a 20 to 25% growth in individual protection on a normalized basis is what the company has highlighted.
All right, Upasana, thank you very much for that. Well, let's, on that note, bring in Ashish Kayal to talk about some more trading strategies, what you could perhaps consider over the last half hour. Ashish, good to have you. So what thoughts now? Any fresh stocks? Any more advice on the index as well?
Index is closing near the lifetime high levels, and there is absolutely no stopping here. It is overbought, so it's better to use any kind of a dips, like I said earlier, as a buying opportunity over here. And we can expect it to eventually move towards the level of around 22 to 76, which is again level. So I think any dips from here, if you get around 22k or a little below that, use that as an opportunity. Aim for positionally, because that's where the money can be made easily, since the markets is moving in gaps. In intraday basis, you are not getting much of an opportunity to enter with prudent risk reward, but on an overnight basis, there, if you buy, you are able to make money the next day. That's how it's happening. So the overall trend is bullish. And from stock specific, I think SJVN is once a stock showing a very strong move on the upside, nearly up by 9% and more. But I think there is more steam left in this stock. We can expect it to go towards the level of 112 on the upside, and any dips here around, if you can get the stock around 99, can be used as a buying opportunity. On the downside, maintain a stop loss of 96. And one more stock that looks good is EIH Hotel. We can clearly see very strong breakout on the stock as well, and trading near 52 weeks high. One can create long positions on this stock, maintaining a stop loss of 280 in EIH Hotel and expecting a target of around 310 level.
Okay, all right, Ashish, good to get those get that view on the index. And of course, as you said, it's basically moving from gaps to gaps, not intraday, but when you come back in the morning, and then there is some follow through the rest of the trading session. Thanks very much for joining us and running us through that. Well, HDFC Bank will be the big number which will come out tomorrow. I think numbers come out post market hours tomorrow. Now, Abhishek is here with key expectations to this one. Abhishek, over to you.
Well, it's expected to be a mixed quarter for HDFC Bank, but largely on the good side. Take a look at the business update they gave in. The loan growth was pretty robust at about 4.9% quarter on quarter. So the net interest margin can remain stable as CD ratio has improved sequentially. So net interest margin is at 3.4% expected to be in Q3 FY24 versus 3.4% in the previous quarter. And this is as per Nomura estimate. Jefferies estimates slippages of about 6,300 crore. Morgan Stanley estimates slippages of 6,500 crore. Remember that in the previous quarter, it was around 7,800 crore. So slippages are expected to come down sequentially, which can also mean that asset quality largely to remain stable on a sequential basis. However, what can impact the bottom line is the tax rate. So tax can impact the overall earnings momentum, and credit cost to remain stable on a sequential basis. Our poll suggests NII growth of 6.2% quarter on quarter. Remember that the YOY number is not comparable as HDFC Limited got merged right now, and PAT is estimated to be down about 1.8% on a sequential basis. Back to you.
Okay, thanks a lot for that, Abhishek. But what about Federal Bank? What are the expectations out there?
Well, it's expected to be a weak quarter for Federal Bank, Nigel. So business update did show that the business momentum growth is the lowest in last 6-7 quarters. Along with that, CASA ratio is at 15-quarter low. So the net interest margin as per Nomura is expected to be at 3.1% when compared to 3.2% in the previous quarter and about 3.5% in the same quarter last year. Credit costs can rise on a sequential basis. Analysts like Morgan Stanley is expecting slippages of 500 crore. Kotak Securities is estimating slippages of 600 crore. Last quarter, the slippages were around 373 crore. So a rise in slippages can hurt the credit cost. Asset quality largely expected to remain stable. Gross NPA ratio anywhere between 2.2 to 2.25%. Operating profit growth is seen at 3.5% YOY and a decline of 0.4% quarter on quarter as per Kotak Securities. So operating profit as well could be on the weaker side. Now focus would be on commentary that the the management gives out with respect to liability side management, near-term growth outlook and normalization of their return ratios. Our polls suggest NII growth of 8.6% YOY and about 3.5% sequentially. We are working with a profit growth of 14.3% YOY and a decline of 3.7% on a sequential basis. Back to you.
Thank you for that comprehensive lay of the expectations from Federal Bank. LTTS, that's L&T Technology Services 2, reports numbers tomorrow. The stock, after a run-up over the last 4-5 days, is a bit subdued, down 0.5%. And in the last 1 year, the stock has seen a gain of 57%. LTTS reports numbers tomorrow. Get into a break. We'll come back and talk to Ambarish Baliga, who will be joining us on the other side.
Okay, welcome back. You've got the market, which is pushing higher even as we speak. So 200 plus points and 22,100 is where we are at. Now, it's not just the stocks which are doing well, right? The rupees hit a 5-month high today as well. Bond prices are at 6-month highs. Leather is here with details on what's driving, those two sort of asset classes. Leather, over to you.
Well, the bond markets were very happy with the December inflation number. That's come in at 5.67. The market was sitting at 5.9% expectation. Now, with this, the entire trajectory of the Reserve Bank may dip because the Reserve Bank for October, November, December had an average of 5.6. After the December number, we find the average at 5.37. So substantially below the Reserve Bank's number. And as if that was not enough, there were other sweeteners. For instance, the US PPI number was expected to be plus 0.1 month on month. It came minus 0.1% month on month. So you saw the yields reacting over there as well. In India, again, there was going to be a state loan auction. They were supposed to, according to the calendar, borrow about 21,800 crores. The actual bid amount turned out to be 19,000 thereabouts. So that again was a big relief for the market, especially in that 14-year bond, 14-year paper. And the third big positive, which seems to be running around, carrying along, is the FPI purchases. I mean, we regularly track FPI purchases of equities, but on Friday, what was the debt purchase? $109 million in one day. And it looks like that buying is continuing even today. So for all these reasons, and the FPIs clearly are buying ahead of what will become open from June, the inclusion of Indian bonds in the MSCI indexes, in the JPM indexes, and eventually even in the Bloomberg Barclays indexes. So there is that kind of front running, if you please. So the bond yields have fallen, therefore, to 7.13 early morning, and they fell to levels which we have not seen since July last year. They are not settling there. There is, of course, a lot of short covering as well. But the point is there is a decent amount of FPI buying as well. The rupee market reacted less. At one point in time in the morning, we saw the dollar as cheap as about 82.75 thereabouts, a level which we have not seen probably, since August or September. So that also was a 5-month high, but that was brief. We appear to see a lot of dollar buying coming in from public sector banks, which brokers say is on behalf of the Reserve Bank. Be that as it may, the RBI is now comfortable with 82 point something. Until a few months back, they were defending 83.3. So clearly, it looks like the central bank also has come to terms with the fact that there could be some bit of rupee appreciation given the ferocity of inflows.
Okay, thank you very much, Lata, for explaining that. Amrish Balika is also with us on the show. Amrish, before we get to some of the big movers of the day, tell us about your pick, Poonawalla FinCorp. Why is that?
Exactly. This is an NBFC focusing on consumer and MSME financing. It's a pure retail play with a digital-led platform. They are present in about 19 states, have a branch network of 102 branches. And they doubled their AUM in the last 3 years post-takeover of Magma, and currently it's about 20,000 crores. And they had the highest ever disbursement of 7,800 crores in the last quarter. If you look at the gross NPA and net NPA, they stand at 1.36% and 0.72%, which also includes a legacy book. So otherwise, if you look at the gross NPA for the new book, it's about 0.4, which is extremely good. And they have a good provision ratio of about 47%. And if you look at the profits, they've been growing quarter on quarter since they have access to low-cost funds and low operating expenses. If you look at the NIMs, it's about 11.42, which is quite high if you look at the NBFC space. And on the operational front, the turnaround time for loan offerings, I think, is the fastest in the industry. And the recent RBI diktat on personal loans below 50,000 rupees, I don't think this will affect Poonawalla as such, because if you look at the average ticket size is about 80,000 rupees, and 62% of the loan book has a credit score of 750 plus. And if you look at the Q3, which should be coming in the next couple of days, I expect that to be extremely good, in line with what we have seen in the past 9 to 10 quarters. And if you look at the AUM for the next 3 years, that is by FY26, I'm expecting it to double to about 48,000 crores. And based on that, my EPS estimates for FY26 is 27 rupees, and my target works out to 675.
Amrish, Polycab has fallen about 25% from its recent highs. Is that a good reason to buy this stock, given the overhang of, the tax tangle?
See, I think we will see some amount of bounce back because it was a very decent fall in those two days. So surely you'll have short-term players getting into it. But I still see the pressure on because, if you look at the institutional holding is decently large. So you'll have a few more institutions coming to sell. And I would see it as a good buying opportunity closer to about 30-50 to 3,500 levels. In that space, I think it would be worthwhile. Because, from an earnings perspective, quarterly earnings, I'm quite sure that the management will utilize this the news which has come out to possibly clean up any of the skeletons which are there in the balance sheet. So, I really don't expect good numbers immediately. But we should also remember that whatever is being talked about, that 1,000 crores or 1,500 crores sales which was not reported, I think that will finally start getting reported because they'll have to clean up and move ahead. And I think that will be positive going ahead in the longer term. And clearly, we have seen performance from this company in the past so many quarters. So I think 3,250, 3,500 levels would be an extremely good level to buy for long term.
Okay. Amrish Shah, thanks very much for all the perspective today. We are close to the end of day's play, and what a day it's really been for the market. Absolutely ending in style on a high. In fact, the highest point, we're virtually 2-3 points away from the highest level of the day. So there's been no dithering or any profit taking of that sort. A whole 1% up to kickstart the week with the Nifty very firmly above 22,000. In fact, 22,100 has been achieved. If you talk about the leaders, then we had a triple engine firing away today for the market. IT, banks and Reliance Industries, and that explains the strong show. Wipro was topping the charts with a 6.5% up move. HCL Tech, Infosys had some more buying after a mega Friday. Tech Mahindra as well up about 2%. So these are some of the big names. And there's HDFC Bank approaching its numbers, with a lot of green on the screen, 2.5% up over there. And as I mentioned, even a Reliance Industries, which added another 1.5%. Reliance, by the way, in January has already put on about 8% on the board. So it's been a phenomenal January for Reliance. The sleeping giant, as some call it, has finally started moving. And then you had, a good chipping in from the likes of an SBI, HUL, Kotak Mahindra Bank. So lots of the big boys on the upswing. Downside, some of the non-bank financials, HDFC Life, because of their poor show in the third quarter, lack of enough growth visibility in the quarter gone by. And the Bajaj twins on the NBFC side, Bajaj Finance and Finserv, they saw some profit taking today. But otherwise, what a solid start to the week.
Yeah, absolutely. And by the way, the US markets are not there, right?
Yeah.
So there's nothing to, in that sense, worry. It's not as if you're going to wake up with NASDAQ down.
With some major...
Not that would have mattered too much,
yeah.
So at least for tomorrow morning, it's going to be just how you left off. And maybe a little, a few Asian markets, etc., which is more manageable. But 22,100 plus on the index. What absolute rocking market this is. You've got to sometimes rub your eyes to believe what's going on, right? Day after day. To be fair, we had about 10 days of sideways kind of market, very ranged activity, and the breakout happened on Friday. But it's followed up. 2 days, you basically have to 400 points on the Nifty. It doesn't give you too much time once the market decides that it wants to go higher. So that's where we are at with the solid gains. One lesser talked about sector today has been the PSE space, the public sector space. And I'm just looking at the broader market screen. So many names, which are up 15, 20% in that space, which is incredible. That's the index itself, which ended about 2.25% higher in a trade. I think we've got to wrap up on this edition. A closing bell from all of us here. It's goodbye. Thank you very much for staying with us. But markets forward will pick up on all the action in just a bit from now. Stay with us.